Hi, I'm Alex Guns, the manager of the Heptagon Future Trends Equity Fund, and I'm here today to talk to you about telemedicine. Telemedicine is a very new and exciting development within the healthcare space. Think of it as being electronic information to promote better patient and clinical outcomes. The word itself is a portmanteau. On one side you have telecoms, on the other side you have medicine. And maybe the best way for everyone to think about this is really as the decentralization of healthcare. It's something which is being enabled by broadband and by smartphones. If you think about the current market today, it's a market that to our mind is very ripe for disruption, is very inefficient. You have to wait a long time to get a doctor's appointment. When you turn up there, the doctor will analyze your symptoms only from the outside, send you home perhaps with a prescription and hope that it can get better. It's actually wasting a lot of time and also money. One key statistic I think which it's important to take away is that for every $1 in five spent on US healthcare is apparently today currently either wasted or misallocated. I think the best way of answering that question is really very simply that everyone wins. Think about it like this. You have customer demand really being matched with physician supply. Healthcare is really delivered to you, the consumer, regardless of your location. So effectively what you get as a result of this is better allocation of staffing resource, much less travel time either for the patient or for the doctor, and then hopefully better clinical outcomes, so fewer or shorter hospital stays. One of the interesting statistics is that in the largest study that's been done to date on this topic, the calculation that we arrived at, or that was arrived at, was that $472 was effectively saved for every telehealth consultation relative to a real world consultation. Well, as with many future trends, I think the pandemic has really accelerated the inevitable. We're still getting the data and the statistics for 2020, but based on what we've read in terms of consultants' reports, the view is that probably a billion global virtual healthcare visits took place during 2020. One of the leading players in the field, a business called Teladoc, said that at peak it was handling 15,000 requests a day. One other interesting statistic is that when you look at the data, you wind the clock back a year, and only about 11% of consumers interviewed said they were actually using telehealth services. If you wind the clock on to 2020, that figure rose to 46%. And clearly, we're now still in this pandemic phase, but we think, and certainly from what we've read, is that the new normal, if you will, where might telemedicine visits stabilize, it could be at about a level 40% higher than the pre-pandemic. And in some ways, there's probably little wonder that it should be so much higher, because again, when you interview consumers, you ask them about their experience, and 84% said that they were able to get their concerns resolved during a telehealth visit. One other statistic or takeaway that I think is interesting and useful is that whilst the industry is arguably most developed in the United States, adoption of telemedicine has actually been very global. It's been very prevalent in countries as diverse as China and Japan, but also Israel and Estonia. I think there are clear limits to what telemedicine can do. It's obviously never going to substitute for in-person visits. You lose some of the non-verbal cues, some of that relationship that you would actually have talking to someone face to face. And clearly doctors can't perform physical examinations on screen. The other consideration is that when consumers have actually been asked about their experiences, and we're still, remember, in an early phase of adoption, 52% of users said that they had encountered at least one barrier. And those barriers might be anything from, say, limited range of services, expectations not being properly aligned, confusing technology, and also lack of awareness about cost. I think the good news, at least, is that there are solutions at hand. One is certainly to make sure that broadband is rolled out more actively in order to make sure that perhaps those most in need of healthcare, say of poorer incomes or more remote rural areas, actually have access to broadband. And then another consideration that I think everyone, all the stakeholders in the industry really need to think about is how you secure what's potentially very sensitive and clearly confidential data. I have no doubt this is going to be a massive opportunity. Most consultants, when we've looked at their work, suggest that you could be looking at a 15% compound annual growth rate for the industry at a minimum in the coming years. Perhaps a different way of looking at it or answering the question is that when you think about adult potential patients in developed world countries, and the figure you come to is just over 1 billion people. If you look at how many of those people are actually using telemedicine services today, and we're not even 1% penetrated. So a huge opportunity there. If you just take one figure, say from a consultant like McKinsey, they're suggesting that about $250 billion of US healthcare spend could effectively be virtualized or taken online, if you will. And then there's no doubt that if you look at the amount of venture capital money that's actually flowing into this area, and it's been absolutely huge. Best guesses would suggest it was probably about $10 billion coming into the US last year. I think from the perspective of a public investor, one of the challenges is that there are very few listed pure plays today available in the investment universe. Lots of companies as diverse as, say, Cerner, Cisco, IBM, Medtronic, Siemens Healthineers, they all say they're involved in telemedicine, but it's ultimately only a small percentage of their business. I think when we look around, the largest pure play company is a US listed business called Teladoc. It's capitalized at about $40 billion, and on best estimates, it's probably 4 to 5 times larger in terms of customer numbers than the next nearest player. The only issue I think every investor needs to be aware of is that if you look at consensus estimates for this business, it's trading on about 35 times forecast revenues, over 300 times forecast EBITDA, and it's not making any earnings today. There are also some Chinese players that are listed, Ping An, Good Doctor, and Ali Health are potentially interesting opportunities. But given the growth ahead, investors should certainly watch this space, and there'll undoubtedly be further opportunities ahead. So thank you everyone for listening. If you have any questions, please don't hesitate to reach out directly to me or to your representative at Heptagon Capital.